Aloha and welcome to Java. Thank you kindly for joining me. It is Thursday, May 9th, 2024. We've got a lot to go over today, so let's get right into the markets. So first, we are expecting the jobs numbers coming in 8:30, which is prior to market open, not too long from now, probably about 45 minutes as I'm making this. So we are looking at our main risk indicator is the MMRI, still in high territory, but not really changing a lot. We're getting consolidation. So typically in the markets, we get consolidation. The longer the consolidation prior to a move, the larger the move is. So been here for a couple of days now. Fear greed index still in that fear inching towards greed. However, what we're looking at is the sentiment is cautious, kind of a little bit lower, mixed lower open. We are waiting on the jobs numbers. We'll go over that in a minute. So we'll be watching the, of course, 10-year yield and the relative strength of the dollar. So both of those rose only slightly yesterday. That did put some pressure on stocks. So they ended slightly down, except for the Dow. Watching the volatility index is increasing slightly. So this is good for day traders. Just be ready to change your position directional in your trades. So we're watching silver and oil increasing right now, doing pretty well with gold still under slightly. I expect gold to catch a bit if that numbers comes in one way or another. So, and we've also got crude is at a precarious position here. So moving into our calendar and earnings, we are getting that number 8:30, probably about, as I said, 40 minutes from now. And then we're also getting a Fed president speaking. So if there's too much that happens in the market, they always use Fed presidents to come out and kind of manage that with their speeches. So tomorrow morning, we're getting, prior to market open, another Fed president just in case. We're getting consumer sentiment and a couple of other things later in the day. So right now, looking at earnings, we've got a couple of companies today. Roblox, if you're looking into that, trading Marathon is an interesting one to me. So got a couple of solar companies and whatnot. So Friday prior to open, have a few companies wrapping up the week. So with this, let's look at what is going on with banks. So we've got Einhorn's major manager saying markets are broken and what the data shows. So basically what it's getting at is between all of the management in this markets, all of the manipulation, the free money, there is no market that can determine a fair price right now. So nothing is going as it seems, these very distorted numbers. Jobs numbers that come out, we do expect those to be distorted as well. But we're still watching them because whatever those numbers come out with are going to be the excuse for the movement of the central bank. So basically, however they spin how these numbers come out from the BLS, Bureau of Labor Statistics, we'll see what happens. So with this, looking forward to other central banks, Sweden cut their rate. So as we've been talking about before, they have to move either at the same time as the Fed in the US or ahead of it. And so it looks like Sweden has taken the first step. So moving forward, we are looking at bond yields, and the pound fell. Two Bank of England members voting for a cut. So they didn't cut, they left their rates unchanged. However, the fact that it looks like they may cut soon is enough for the markets there to react. So the next one we are looking at is the European Union, of course. So if they cut their rates and the Federal Reserve does not, I'm buying some euro and probably going on a vacation over in Europe because that means that they are on sale. So USD will strengthen if that happens, and the euro will fall. So that's just, I don't know if I will or not, but it's just to give you an idea of what's going to happen. So basically, Europe will go cheaper to cut rates. inflation will increase, but their currency will drop. So if you trade for the currency, take over US dollars, which most places accept, you get a discount immediately. So we've got the Swiss National Bank brought this up because they're looking for ways to tokenize their financial assets. So we've been talking about tokenization. I'm probably going to do something separate on that because it is becoming more of a larger and more clear, and seems like a lot of people don't understand exactly how that's going to come about. So with this, one other central bank I want to touch on is the Bank of Japan. Why? Because they're the largest holder of US debt, and they could really, with their foreign currency reserves, and then also if they choose to sell off that debt to protect their currency, could cause some waves. So they're flagging again, they're having more inflation that they haven't gotten under control. So they're talking about rate hikes again. And rate hikes protects the currency, but it hurts basically the economy. You've got to choose between the two. So with companies and jobs, we're looking at the real economy now versus this managed, overblown markets that are disconnected. We've got a report revealing huge increase in layoffs surpassing Great Recession peaks. So they're talking about Great Recession referring to 2008 time period. And then we've got the S&P 500 continuing reviving on slow US job growth numbers. So going into this prior to getting the numbers out, but I want to set you up to understand what's going to happen depending on whether the numbers are as expected. So it doesn't matter low or high, they're going to come in high. For unemployment is increasing. We've got this report revealing huge increase in layoffs, including the transportation industry. So transportation sector reported over 14,000 job cuts. It's a 587% increase over last year. So happening across the entire sector, it's not just one area. This includes airlines and shipping. They're saying it's mostly disruptions in supply chains and also reduced demand for travel. So, and I can tell you, I was just traveling yesterday. It's still full, but it is easing up a bit. So, in the financial sector, we've got more layoffs increasing about 56% over last year, which is still a ridiculous number. So, these are all a huge red flag that things are changing. We've got industrial manufacturers. Basically, that sector's had a spike with over 7,806 layoffs so far this year. We've got the energy sector laying off. Their number is 10 times higher than last year. And we've also got in the food industry. So food sector, and I believe this is going to have a huge increase, this next report, over 9,824 jobs lost. This is an increase of 355%. So these layoffs in the food industry do not include the recent layoffs of all of the fast food workers with the backlash of the minimum wage increase, which has pinched companies. So with that, we're going into housing. So across the board, a lot of seriously underwater home mortgages ticking up across the United States. So had this bump in interest rates, mortgage rates, and also prices in general. So when the price of all these homes shot up, everyone purchased just like a repeat or rhyme, if you will, with 2004, 2006, and then 2008 happened. So a lot of mortgages going underwater. So with this, we've got rental issues. So rents climbed over 1.5 times faster than wages in the past 4 years. And because they've outpaced salaries, this is causing major issues. So outpaced salaries in all but 6 out of 50 metros, so city areas. This is according to Zillow. We're getting their reports. They're still rising. So rents will have to come down again. Nationwide, rents climbed 30.4%, while incomes only increased 20.2%. And this is from the time period of 2019 to 2023. So these reports, the data is coming from Zillow, Street Easy, and the BLS, Bureau of Labor Statistics. So we've got mortgage rates also in the UK. So this is globally, they're having issues also. Mortgage arrears rising. So borrowers cannot afford their house payments anymore. So moving forward, TD Bank valuation getting interesting, speaking about stock market, because it's so disconnected. Stocks are still increasing on this, along with the inflation. So inflation will continue. We've got bad weather and war straining global wheat supplies, threatening higher food costs. This will hit across the board. So we had another Chinese project. So this one got scrapped, having issues with the Panama Canal. This was something that they were doing, basically funding with the Chinese state to cross from the Atlantic to the Pacific, and that would have eased shipping, but they pulled out of that project. So with this wars and trade wars, mostly trade wars. So Chinese president is meeting with Macron and also Ursula von der Leyen, so in the EU. So she intends to discuss the current imbalances between China. She is basically blaming China for all of their exports for putting Germany's industrial production out. So not accounting for all of the other things going on and all of their central bank manipulation and inflation in the background. No, she's going to blame China. So with that, I want to go over our garden farm for the day. Want to hit echinacea, even though it's not quite the season for it. It's mostly for cold or immune, known for its immune boosting properties. This is a great one to grow indoors or outdoors. So it's also got anti-inflammatory properties. It is basically used as a disinfectant topically, and also it's good for your skin, psoriasis, eczema, and can help slow healing wounds. So good, pretty, they also call it purple coneflower. It's in that family, very easy to grow. So one that I encourage if you'd like to put that in your garden, also beautiful. So with that, I wish you all a great trading day. Please leave comments below on things that you like or don't like. Seem to get some positive response for the herbal gardens that we're looking at. And until I see you again, my friends, stay free.